Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar and this is effective for May 6, 2024. Let's get started. Our SEAF signals for this week are utilities, which is a new entrant, and industrials and financials, which are legacy. We've been talking about utilities. We mentioned them last week about a potential area of interest as we were seeing money slowly kind of creep into utilities. That got confirmed this week with the top trading week. So that was kind of nice to see. Um, Now, the thing I do want to note about this top trading week utilities, the overall flows were not as strong for a normal number one. I think we've done a study before, and inflow of 0.4% on a given week is a relatively strong, or at least on average, a relatively strong one. This is about half, so about 0.2% increase in flows for utilities. So not a strong conviction bet, but we really like the momentum that we're seeing here in utilities. We'll highlight that a little bit more for the rainbow charts in a minute. Financials and industrials kind of holding on by a thread, really bringing on by that legacy tactical month and strategic quarter for both industrials and financials. As we can see, and we'll show a little bit more on our heat map in a second, but money is flowing elsewhere. In general. And then last but not least, energy with an extremely strong reversal coming in at number 11 on the trading week. This was a 0.61% outflow of money from energy, just a real steep reversal as what had been a relatively strong sector for us over the last couple of weeks. So energy taking a giant dive. Um, Another quick thing to note on flows, we were net negative on flows last week, and the odd thing you can see here now in the heat map is that we are overall green on the trading week. Most of that outflow really came out of energy. I think we had a negative net 7.74% outflow for all of the sector spiders in general, and like I said earlier, 0.61% outflow for energy. So a good chunk of that money flowing out of just energy as a really strong move. As you can see here, as I've mentioned in the past, or probably ad nauseum, that when this thing is really working, we starting to see the greens kind of clump together and the reds clump together. Obviously, this trading week has thrown that for a bit of a loop. As we can see, healthcare, technology, and consumer staples at 2, 3, and 5 respectively, um, being relatively green. What I'm calling this week is kind of a shotgun approach by managers. It very much looks like they took all their money out of energy and then distributed it relatively evenly amongst the other sectors, as we didn't have a major conviction bet on any of the inflows coming in. Like I said, the highest inflow being utilities at 0.2%, uh, and the rest of them being anywhere between zero and that number. Kind of sprayed across. So I think what managers are doing is whatever triggered the energy outflow, really drove that money out, and then they put their money broadly across multiple sectors in hopes of finding that next horse. So as of right now, utilities being our lead horse here. Seif doing a good job picking that up, and then the rest I think is going to be really a wait and see. We got to see what these numbers do. Is there going to be more conviction in healthcare after it being low for such a long time? Are we going to resume that technology trend that we had at the beginning part of this year? I think we need another week to really solidify what's going on here in terms of the broader model. But it's nice to see utilities kind of hold firm, especially after last week when we kind of called that out to say that this was an area of interest um, for SEAF. Now, going into our rainbow charts, technology, this is kind of what I wanted to highlight here. We got a little bit of a pop in the trading week, but nothing broadly, which is why we don't ever trade this model just on the trading week. You really want to see that momentum over a course of multiple time periods to really highlight the fact that, money's moving in this space and it's moving with conviction. Obviously, if you can see here, we can zoom in a little bit of slight uptick in the relative outperformance for technology, likely pushed on the trading week, but this is still in that kind of a void ranking toward the bottom of our overall rankings here at technology, but rated at a third. So the reason I just wanted to highlight here that, a good trading week does not make this model. You really need that momentum from several time periods to kind of carry this up. But technology uh, seemingly at a support level here for our relative performance chart. So a space to keep an eye on. Again, I really think that there was a shotgun approach by managers with the speed and the aggressiveness of money coming out of tech, money coming out of energy, and kind of shotgunning. I would bet money that we're going to have a little bit more of an understanding of where this money is really going to be flowing next week. Um, but technology showing a bit small signs of life. Moving on to financials, kind of financials on the reverse end. Money wasn't money flowed out of financials, not at a extremely high clip, but relatively strong flow. It kind of deadened our little bit of gain in the relative outperformance in its tracks, turning into that continuation of that more or less sideways period for financials. Financials heading in the wrong direction. Still a SEAF signal, but a little bit on weakness. I think it was ranked 10 on the trading week. So just keep an eye on financials. See if this holds. But with the way things are moving, we're going to need another week to kind of solidify where we're going. Energy. There is no question in energy. Energy took a dive off the cliff. As I said, it was an extremely strong conviction in outflows of money. 0.61% outflow, which is really strong for a trading week. As you can see, that took us from top favored down into neutral, being held up very much by our previous time period. Still one in the strategic quarter, four in the tactical month. But money flowing out of energy. We did see this before, so this is not out of no, sorts. You can really see here at the end of September, early October of last year, had that kind of deep dip that resulted in a steep decline in relative outperformance, but then we did rebound. As we're not projecting cash flows, I'm not saying that this is going to rebound next week. I'm just looking at historical patterns, seeing that this thing energy does take some breaks and then resume. You know, you know, all I'm saying is I'm not calling for the death knell of energy here. This does seem to resume pattern, but proceed with extreme caution. It is not a SEAF signal for this week. It is fourth overall in the total rankings. And again, keep an eye on this space. Don't know what's happening, but strong conviction bet of money flowing out of energy. Utilities, we mentioned last week, utilities was starting to look a little bit strong, and it really kind of came out for us. Headed up into it's our top SEAF signal, up in that favored ranking pretty strongly, and we are seeing that relative outperformance to boot. We do have some resistance coming up on the utilities in terms of the bottom half of this chart, but utilities looking strong. Again, like I said earlier, though, wasn't a super strong conviction bet on this particular trading week, but we are seeing this thing trend in the right direction as we've gone from 5 to 2 to 1 over this. So we've really built up some momentum in utilities, and that's showing out in that relative outperformance. Healthcare. Uh, Healthcare was third on the trading week, but overall still in that avoid neutral area that we've been seeing. Still sideways. We are not seeing the outperformance that we'd like to see. Again, for these things to work, they need to trend in multiple time periods. So we would need a couple of more weeks of healthcare being high on the trading week for this thing start to build momentum and pick up that relative outperformance. We are not there yet, and that's where healthcare is. Last but not least, industrials. Holding strong. We have this nice trend of relative outperformance going back to the late part of January, early part of February. We are staying in favored ranking here. Um, we did have ever so slightly positive flow. We did not go negative for industrials. Industrials is hanging on and still looking relatively strong, but as if we get in here, we are pointing in the wrong direction. As I mentioned earlier, and reiterating this, it appears that managers went on a shotgun approach for the money that they pulled out of energy. Industrials was really not one of those industries that they put money back into, but they didn't leave either. So a space to continue to watch. Industrials remains a SEAF signal. It is second overall. Pretty strong momentum at industrials back, but hate to see the six kind of pop up. But again, this was still a net positive for inflows. We do have some strong momentum here. A bit weakening, but industrial is still looking relatively strong. That's all I have for this week. I look forward to breaking down the SEAF model with you all next week, and I hope you all have a wonderful week. Thank you.